back to this section of the course again. Now, we're going to discuss here how to spot a trend in gold. There are 4 ways basically to spot a trend in gold, whether it's going up, down, or sideways. And this could help you with your trading, or even if you don't do trading, this will help you determine whether gold goes up or down. You know, you could be doing it for business or whatever plans you have. Now, we're going to focus on gold here, but whatever I do can also be applied to silver and base metals such as copper. So basically, there are 4 ways to spot a trend in gold. The first is basically gold is used as a safe haven. You know, whenever there's problem in the world, of war, natural disaster, people tend to flock to gold because it is a safe haven. Number 2, there's also seasonal patterns in gold. Yes, gold does have its season where it tends to move more in certain months and move less in certain months. So if you are going to be trading gold, or if you're going to be buying and selling gold, just make sure that you are in during the good season and avoid the bad season. Okay, next, which I find very easy, you know, if you know a billionaire like George Soros or even Warren Buffett is in gold, then I have only one advice: follow, 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 follow. There's no need to think. It's such a no-brainer. The billionaires know something. They know the big macro trend, and this usually precedes a movement in gold. Okay, the 4th one is basically you got to know technical patterns in gold. I'm not asking you to be a technical analyst, but what you can be is basically go to the sites such as SAFU Trader or tradingfloor.com, and from there you can basically have people do the technical analysis for you. So what I really want to say here is that financial markets are very fractal. Okay, patterns tend to repeat itself. So what you want to do is really to get into the trade very, very early if you do know a pattern. However, even the most established patterns are often negated by news. So please be aware of this, that you know, you might have a good pattern. For example, gold is going up during the presidential election when Trump was about to win. But once Trump gave his victory speech, guess what? Gold turned south, and very violently so. Why did this happen? Let me tell you why. Because suddenly Trump announced that he was doing a lot of spending in infrastructure, that he was going to do some inflationary policies, and this would basically cause inflation to the US dollar, which would cause an interest rate hike and move the US dollar up. And because the US dollar is inversely proportional to gold, guess what? Gold went down. So this is what you do, okay? Remember that whatever most beautiful technical pattern of Fibonacci levels that you have, once news comes in, it will definitely change the level and change the targets. So if you get yourself in the wrong side of the market whenever news comes in, I would advise you not to hope. Just get out as fast as you can. Head for the exit, guys. Head for the exit. So let's go to the first reason. The first reason is that gold and silver can play function as safe havens. Yes, although gold and silver does not play interest, people tend to buy gold in times of trouble. For example, natural disasters, earthquake. Not only do they buy gold, okay, they also buy safe havens like the Japanese yen. Whenever there's a terrorist attack, gold tends to go up. However, you know, recently I do not see a lot of movement in gold when this happens. I think that people now know, or countries know, how to handle terrorist attacks nowadays more so than before. So if there is a movement during a terrorist attack, it's usually a temporary measure. Okay, next, surprise news. You know, news comes out, surprise. For example, surprise election victory. There are going to be a lot of elections. You know, we're just done with the Donald Trump election in the US. We had Brexit earlier, and next year we're going to have the French election, the German elections, and of course Italy, as I talk, is about to go to a referendum. So a surprise election victory here tends to drive gold up. For example, Brexit in the UK and Donald Trump's victory in the US, at least before Donald Trump gave the victory speech, which sent gold down and everyone reeling. Okay, and during the show just now on Saxo, I did show you the gold silver ratio, and this is when you determine which one to buy or sell. For example, you know, if the gold silver ratio is high, above 70, and if you see a good opportunity to buy gold, you might want to buy silver instead, because when the gold silver ratio is high and gold wants to go up, which of course will also bring silver up, then in that case, silver will tend to go up faster than gold. And you always want to invest in something that goes up faster than the others. Number two, gold seasonality. Hey, guess what? Gold has a definite seasonality pattern. And, it has an average 1.2% gain in March to August and 13.2% in other months. So this was since the 1970s, and this data was actually studied with a 95% statistical confidence level, which means it probably happens. So you see the most active months there, okay, which is basically from September all the way to April. These are the most active months for gold, and you can see that gold moves up higher most in September. This is because of the Diwali festival in India. They like gold. They tend to buy gold at that time. So seasonal factors aside, news can also move gold's direction. Okay, but just look at these seasonal factors. It should give you a good and a very good way in order to determine the way to buy gold or when to buy gold. Number three, just follow Billionaire. Okay, if you Google Soros and gold, you're gonna see a lot of news on what Soros is doing to gold. So basically, Soros early in 2016 bought gold to the exchange traded fund GLD, and he also bought a lot of shares of Barrick Gold. But guess what? In November, he started selling this gold holdings. But he kept some shares of Barrick Gold, okay? So this is very good for gold early in the year. Now, of course, when Soros sells out of GLD, that's not good. But Soros did that, and now in November, he's open stake in the largest China-focused ETF, that's FXI. So we want to see what George Soros is doing, because whatever he's doing will probably and most probably influence the direction of gold. And just follow him. Okay, so now the fact that he's in Barrick Gold, this is 22nd of November, maybe we should consider looking at that stock rather than looking at GLD. Or another position would be you sell GLD, or you don't even do anything, at least until you're confident that gold is ready to go up again. Now, the fourth reason why gold if you want tips on where gold is going to, just get analysis from the experts. Just go to the site for tradingfloor.com, which I showed you earlier. There's a lot of webinars here on commodities, so you can get real insights and experts from this guy. This is Ole Hansen, and look there, he even does the levels of gold for you so that you do not have to do it yourself. So here in this video on 21st November, he actually mentions gold's critical levels to be 1,233 on the upside, 1,250 on the upside, and 1,170 to the downside. At this time, gold was trading at 1,212. So what I could see is simple. If gold does go towards 1,233, I'll put in a buy order. And if gold goes down and goes below 1,170, then I could sell at that time, because that would break all the existing technical patterns. And all these technical patterns are not determined by us, but are determined by this very, very thorough analysis by Saxo. So when you want to get involved in all these kinds of investments, I think it's better that you really ask someone else, ask the experts to do the studies for you, and then what you do is then interpret what's going on. Okay, and as far as commodities are concerned, I think it is good, because if you want to be successful in the markets, you really got to find a bull market to trade in. So we see that copper bottomed out in January 15, 2016, and we can see that the Bloomberg Commodity Index also started turning at the beginning of the year 2016. Now, not only was it turning, but you could also see on the right there, money was piling into precious metals. These are the exchange traded funds, GLD and also SLV. So when you have money going into exchange traded funds, then you have a lot of confidence that the money that's going in is for real, and because of this, that the trend would probably be more sustainable rather than a false break to the upside. So the case for commodities, again, there's been that sinking feeling for this past 4 years or so. If you look at the charts there on gold and silver, basically gold and silver went up since the 2008 financial crisis, but since 2011, it's been 4 years going down, and it only started turning at the beginning of 2016. You see that? Same for gold and same for silver. You look at gold went from around what, $800 US dollars to $1,800 US in 2011, and went down to almost 1,050 in 2015 before started going up. So it's been a big fall for gold. I think gold is also due for an uptrend, and so is silver. And this is not an uptrend. It's going to last several months. I think this is going to be a multi-year uptrend, but we have to be very, very patient. And this is, of course, in November 2016. So this also shows you the chart of gold and the progression of gold. You can see that gold went up during the oil shock. This is an example of news. When Paul Volcker was the chairman of the Fed, gold of course went up together with the oil shock. Gold also went up during the Plaza Accord, which pretty much agreed to devalue the US dollar. And of course, during September 11, you see gold went up. And then during the 2008 crisis, thanks to this quantitative easing, which is essentially printing lots and lots of money, this is when gold really went up. Let me go back here. Okay, gold really went up before going down. So okay, this is the chart for gold since 69 all the way to 2013. So you can see that gold went up in the early stages because of the oil shocks. Okay, oil shock 1, oil shock 2. This was, of course, when Paul Volcker was heading the Fed. Now, the Plaza Accord pretty much devalued the US dollar, sending gold a little bit up. And irrational exuberance, it went down. This is when stock markets were going up. Gold tends to go down. And September 11th attacks, gold went up again now, but it really shot up during this period of quantitative easing after the 2008 financial crisis, because simply the US were printing more money through quantitative easing. And of course, when there's more money, fiat currency, then gold, precious metals tend to go down. But after that, gold was going down for 4 years until it hits its bottom in the end of 2015 and early 2016. Gold started to go up, and that's when you saw billionaires such as Soros started buying into gold. So this is the history for gold. So why trade commodities? Well, I think it's a correlation to indices and the markets. You see, whenever there's this concept called risk on, and I do have a separate video for this, people tend to flock into oil, also commodity currencies such as the Aussie dollar, and also the crosses of the US dollar versus Japanese yen. People tend to borrow the US dollar because it gives an interest, and borrow the Japanese yen, and to invest in US assets. That's why the cross of the US dollar and Japanese yen goes up, and also the cross of the Australian dollar and Japanese yen tends to go up during a period of risk on, where people, investors flock into the markets and drive the stock indices up. However, during a period of risk aversion, people tend to flock to gold and also safe havens like the Japanese yen. These tend to go up during periods of uncertainty. Also, during periods of uncertainty, there would be better performance from the euro. So really, instead of trading all these indices, you can trade proxy, just gold, just trade gold, which is much easier, and also the precious metal of silver, and also a copper, because copper looks like it has a strong uptrend due to the trend of infrastructure spending. So this is really the timing of the markets that I think you have to get right. It's in Malaysia, so it's GMT +8. So in Malaysia, at least, you know that the markets in Tokyo open at 9 a.m. There's usually slow trading during the Asian session. This is the Asian session, at least until 5 p.m. in Asia, 4 to 5 p.m. in Asia. And in the afternoon, the European markets start to open. You have DAX is the German index. Okay, so you have the DAX pre-open at 3 p.m. At 4 p.m., the German index, the DAX, and also the FTSE in London opens. These are the London and German markets. And of course, the S&P 500 in the US opens at 10:30 p.m. Local time, Malaysia time. And the DAX and the European indices such as the FTSE in London closes at 12:30. This is the closing for the German and also the UK markets. Now, as you go out throughout midnight, you can see the commodities closing at 3:30 a.m. before the US market, the S&P 500, Dow, and also Nasdaq close at 5 a.m. and we go one more round. So please remember this. Now, of course, during daylight saving times, which in 2017 is Sunday, March 12th, Sunday, November 5th, this will move the stock market times earlier by 1 hour. This means that instead of the markets opening at 10:30 p.m., it's going to open at 9:30 p.m. Now, instead of news coming in at 9:30 p.m., it comes in at 8:30 p.m. So you're going to see a lot of news from the US, from Europe, around 9:30 p.m. our time, local time in Malaysia. So please be careful of all the news because, as I said before, news does move markets. And if you're not careful, you can get burned by news, guys. There might be a lot of whipsaws during news. So you can also look at all this Yahoo Finance, because Yahoo Finance, what I showed you, you can see a lot of foreign shares there. These are the various ticker symbols. These are the various ETF, FXI, EWM for Malaysia. Go and explore this so that you know what's going on. These are various sites that are very, very good for you to explore here. Now, here is Anthony Robbins, and I think I would like to end this course with a good video by Anthony Robbins, who teaches us how to trade. So his way of trading is usually asymmetric trading. And what is asymmetric trading? Well, first you got to control your risk to get high rewards. You got to be obsessed with not losing money, but you make sure that whenever you go into a trade, if you make money, you can make 5 times what you lose. And that will pretty much assure you that you're not going to lose a lot of money. This is very important when you are trading. So let's go and see the video by Tony Robbins. Okay, guys, I'm back. Okay, guys, I'm back to my screen here while we wait for the video of Tony Robbins to come out. Well, you can always go to Google News, right? You guys have Google News. So what you can do is, just type gold here, just type Soros if you want news on gold. You get a lot of news on gold here, and the news on gold will come out, and you can. Okay, guys, we're back here on my screen here. So if you want news on gold, okay, just type gold and Soros, and you have all these various news coming out on gold, and you can really look at all this news. Look at the levels of gold. Okay, for example, this is November 22nd. You see, billionaire George Soros is buying Barrick Gold again. Soros sells gold and focus on REIT sectors. These are very, very good. He's focusing on risk sectors now. So just go and read the news. Okay, Barrick Gold, don't buy because Soros did. Just go and see what's happening here. 18 November, billionaire Strand Druckenmiller and George Soros just sold their gold holdings, which is of course not positive for gold. So let's listen to the video by Tony Robbins here. I think this is great. The one thing that top investors do, it gives us a very good lesson on what to do, especially when we are investing. And look here, okay, the world's best investors have one thing in common: asymmetrical risk and reward. Self-help author Tony Robbins said. So it's very important that we know how these guys trade. Again, he reached this conclusion studying 4 years, spending writing his book in 2 decades. Okay, his first book in 2 decades, Money Master the Game: 7 Simple Steps to Financial Freedom. So the fact that Tony Robbins spent a long time doing this, I think we should really follow, and we should really get the lessons for this, because in this case here, Tony Robbins was actually working with this guy called Paul Tudor Jones. Okay, guys, we're here for the video for Tony Robbins. This is the video where he says one thing that all top investors should do is basically talking about what the best investors do, which is asymmetrical risk and reward. So he told a Squawk Box that he reached the conclusion. He knew this 4 years. Okay, he spends 4 years writing his book in 2 decades, the first book in 2 decades, Money Master the Game: 7 Steps to Financial Freedom. And because of this, he gives out the secret of what he advised this good investor called Paul Tudor Jones. And Tudor Jones made a lot of money during the 2009 financial crisis. So this is a very good video that we're going to see. I suggest that we really learn from this video.
Working with Paul Tudor Jones.
Yes.
For like 20 years. You've been working with Paul Tudor. You've been working with Paul Tudor Jones.
Yes.
For like 20 years now?
21 years since he was 39. He just turned 60.
So what is it, just if you could explain it to us, what is it that you do for him?
Well, my job was, he had a rough patch. And here's a man who's one of the greatest traders in history, as you know, right? He's had a time back in, 1987 where everybody's losing money, the biggest drop in history. He made 20% that day, made 200% that year. But it's kind of going to the moon. And then what do you do after you go on to the moon? He lost a little bit of his edge. And I came in and when he's having his tough time, figured out the model of what he used to do, brought it back, systematized it. And my job is to help him maximize his capability consistently. So he emails me daily. I measure things. I come see him quarterly. And we've had this relationship for 21 years.
To buy. You're talking about trying to get his mojo back.
Not mojo. It's about maximizing your capacity. The same thing you do with an athlete. Everybody has certain strategies. It's really about making sure those strategies are consistent. And what I try to do is make it simple enough that he follows through continuously. Because I found, complexity is the enemy of execution. If I can make it simple enough that he does the most important things every time, he's able to maximize his results in 21 years of relationship.
So you measure things?
I measure everything from the way he evaluates trades to what he does before he makes a trade. Before he makes every trade, years ago when he was most effective and he had a little drop off, he stopped doing a simple thing, which was saying, is this a 5-to-1? All of these investors have something in common, the best on earth. I interviewed 50 of them, the very best that exist in the world, and Nobel laureates, and said, what is it that sets you apart? They all are obsessed with not losing money. Paul's not lost money in 21 years. But the biggest thing is they look for that asymmetrical risk reward. So Paul's approach is, if I'm going to invest $1, is it really a 5-to-1? Am I going to make 5? I'm certain to make 5. And yet, unlike some talking heads on television, he knows he's going to be wrong. So if I risk one to make 5 and I'm wrong and I can try it again, I can be wrong 4 out of 5 times and still do well. He's not wrong 4 out of 5 times. So I put together systems that help him to maximize. And I'm there also when those tough times happen to help him shift it around. Because as you know, for a trader, you get stuck. You don't want to take the hit, and you're going to have to be able to do that if you're going to be an effective trader.
Right. I also teach people of Forex. There are various links to my courses. This could be online courses as the module that I have to apply local shares, local IPO shares in Malaysia. I also teach people through FX how to invest in Forex indices and also commodities. This is through online or also through a classroom session. All classes can be delivered through Skype webinars or face-to-face. That's no problem for me. So I hope you come a lot to my Facebook and my site, and the links are all given here. And leave a comment, and let's see what happens. I'm going to add more videos as the time goes by. This is my way of adding value to you guys, and the site and the course is going to be even more valuable in the future, because as I do live trades, of course I'm going to add them on the site, and you can see me doing live trading. So this is it for now. I just wanted this to be an easy way for you to learn about precious metals and also base metals, because I think this is an important subject, and this is why I just gave it at a throwaway price for this course. And I hope to see you more in the future, and I hope to engage with you on Facebook, email, or whatever methods that we have. And you can even WhatsApp me. I've left all the links on my website, on this course site, and I hope to see you soon. So thank you very much, and don't be shy. Just come to this website, or visit my website, visit my Facebook.
We would be honored if you would join us.